Chris Englebert with Englebert Financial Advisers in Allentown, Pennsylvania, and we're starting our summer school session, and the first one is going to be about who's monitoring your 401k, 403b, or 457 plan. Any of you that are on the webinar today, if you have to leave early for any reason, or you even signed up for the webinar and you're not able to attend today, we are going to be sending a link for this webinar to everybody that signed up for the webinar. So just to let you know, you'll be able to watch it at a later date as well. So what are we going to talk about today? We're going to talk about your 401k, 403b, and 457 plan. Now, I just want to let everybody know that here at Englebert Financial Advisors, we run 401ks and 457 plans. So if you're a participant in one of our 401ks or 457 plans, what I'm going to talk about today really doesn't apply to you, because what we do already is many of the things that I'm going to talk about today. What we're going to talk about today is a way that if you have a spouse or a friend or somebody else that has a 401k, 457, or 403b, we are now going to be able to run it or manage it for them. This is something that we could never do before, and I'm going to get into that more in a minute. But remember what your 401k, 457, and 403b is. It's basically a retirement plan that you put money into pre-tax. And so what really the value of it is that if you're making $60,000 a year and you're paying taxes and you put $5,000 into your 401k, which is for obviously private companies, a 457, which is for obviously municipalities, and a 403b, which is for teachers or hospitals, if you contribute to one of these plans, it then saves you money on your taxes. So many times we tell people, hey, look at your financial situation, make sure you're putting enough money in your 401k, 457, or 403b. But what I want to talk about today is managing these assets for you. Now, again, in our practice, we run 401k and 457 plans. And so we have participants where we manage this money for them. But many times we have a client who we're managing their 401k for, and their wife works for a company and has a 401k, and they're looking to have somebody help that person out and manage it for them. Or sometimes we have, for example, adult children who work at a company and they want somebody to manage their 401k, 457, or 403b. We can now do that for them. So many times what happens is when you sign up for one of these plans, when you first get out there in the workforce and you get a new job, and again, if anybody here is younger, the first thing you should do is sign up for your 401k, 457, or 403b, because many times in a 401k plan, you get free or matching money. If you put in 4%, your company matches it with 2%. So many times we encourage young people to sign up right away. But what we see over and over again is that when people sign up for one of these plans, they pick from a list of investments. They don't really understand what they are. They don't understand what a target date fund is. They don't understand what a fixed income fund, et cetera. And they end up selecting their own investments, and they really don't ever change it for the entire course of their career, which is obviously a big mistake. So if you work for a big company, it really becomes a problem because you don't have anybody guiding you on what you need to do or what investment selections you need to make. Many times if you work, for example, Air Products or Mack Truck or some of these large plans, and you log on to your 401k plan, they don't have anybody that you can call. Or if you call the 800 number and say, hey, listen, I'm Chris Englebert, I work at XYZ company, I'm in your 401k plan, what should I be invested in? They can't tell you what to be invested in because they're not registered investment advisors. We happen to be a registered investment advisor, so therefore we're able to give direction to people both on an individual basis and on a plan-wide basis as well. So literally what used to happen is we'd have people come in, to our shop, and they'd sit down and we'd review their finances with them. And they'd say, hey, listen, I got a 401k plan. Can you take a look at it? They'd log on, they'd pull up their 401k plan, and I'd look at the investments. I suggest, hey, move some money here, make some money, make some changes here, less in international, more in US domestic, a little bit more in bonds, et cetera, whatever the case may be. The problem with that was it was never an ongoing situation where people were looking at their 401ks and rebalancing them or making changes all the time. It was more hit or miss. So what we were very excited about is that last year, we partnered up with a fintech company. Obviously, it's called a financial technology company called Pontera. Pontera allows us as an advisor, they have a platform that allows us as an advisor to manage a person's 401k, 457 plan, or 403b plan without us being an advisor on the plan. So again, let's go back to my example of Air Products or Mack Truck. Chris Englebert and Englebert Financial Advisors would love to be the advisor for the entire plan with 20,000 employees, but the probability of that is literally slim to none. So what Pontera allows us to do is that if you're a participant in a plan, and it doesn't matter if it's a 401k, 403b, 457, or even an HSA plan, if you can log on with a username and password, Pontera is then the interface that we can use to manage the plan. So what's really cool about it is that once you sign our advisor agreement, we then send you a link, and the Pontera link is where you put in your username and password. We never see this username and password. It's only known to you. If you change your username and password, we get a message that we can't access your plan anymore because your username and password have changed, and you have to go in and obviously update the Pontera link. But what happens on my end is my Pontera dashboard lights up, and I get to see your entire fund lineup, and I get to see where you have your money and what you've been doing with it. Now, interestingly enough, we did a soft open on this with clients about a month ago, and we've had some clients sign up immediately because obviously they saw the value in what we were doing for them. And one of the things that reoccurring themes that I'm seeing is that when people are managing their own 401k plan is that they literally have a mishmash of funds. One person that signed up for the plan literally had 20 different funds that they had their 401k in, which was a huge amount of over diversification for their plan. So obviously when we took it over, we focused, we consolidated, and we did that for them. The other one that we've taken over literally about a half a dozen plans so far in our soft open. The other theme that we see is really no rhyme or reason as far as why people are in a particular fund. I talked to one client who came on board with us utilizing Pontera. I'm like, how did you pick these? And the person was like, I have no idea. I asked, have you ever rebalanced? Nope, we've never rebalanced. They literally been in their 401k for almost 15 years. So we think that Pontera is really a good product to help an advisor fill the niche of actually taking control of our clients' retirement plans and really turning around and managing for them. So again, it doesn't matter if it's a 401k, 457, or 403b. If you have a username and password, we're able to get that on the Pontera platform and manage it for you. So what ends up happening, like I said, is we send you our client agreement, our fee agreement, and then once you sign that and return it to us, then we turn around and send you the Pontera link that authorizes our access. Again, like I said, what's really cool on my end of things is that my dashboard lights up, and then I can see your particular 401k, 457, or 403b plan. I can see all the investment options. I can see what the expense ratios are on each and every fund that you're in. I can do some comparison side by side with some of the changes I would make with where you're at right now. And in fact, what I really like about it is the fact that once I make those changes, an email automatically goes both to you, the client, and to me, the advisor, saying, here are the changes that were made to Chris Englebert's 401k that Chris Englebert is managing. And here's what the changes were. Here's the funds that were changed. And oh, by the way, here's the expense ratios, the cost, et cetera. Now, the other thing that ends up happening is we can only change the investments through Pontera. We can't change your contribution rates. Now, what I mean by that is that if you're putting 6% into your plan and we feel you should be putting more in your plan, we can't make those changes. Now, I get the question all the time from people saying, well, how much should I put into my 401k and 457 or 403b? And I say the same thing over and over and over again. You should be putting in as much as you possibly can. You're going to see maximums. We just got an email the other day that in 2023, look for some big changes, some big increases in the maximums that you're going to be able to put into 401ks, 457s, and 403bs. But again, the conversation I have when people retire is always the same. When they go to roll over their 401k, 457, or 403b, and they roll it over to an IRA, the conversations are always the same. People are like, hey, I wish I would have saved more. So you'll always hear us say you should save more. But through Pontera, we can't make any changes as far as your contribution rates. You have to go in and make those changes as far as contribution rates. The other thing we can't do, we can't send out any forms. We can only change the investment allocations. We can only change the funds that you're in from that standpoint. So how do we do this? And this is where I get excited about it again, is we log on to Pontera. You get, done the link. We now have the authority to go in and make changes to your asset allocation. So I look at the fund lineup, and what I do with the fund lineups is I feed them into a software program that we've been utilizing for literally almost 20 years. And what this software program does is it takes each of the funds that you have in your particular 401k, 457, or 403b, and it ranks them according to relative strength. What's relative strength, do you say? Relative strength is how strong that particular fund is compared to all the other funds that you have in your 401k, and also all the stock market, the bond market. It's basically what I call the horse race indicator. And what we do with this is then we make sure your 401k, 457, or 403b are in the strongest funds that are available in your fund lineup. We rebalance this every quarter. We're coming up to a rebalance. We rebalance in August, November, February, and May. So at least 4 times a year, you're going to see your 401k rebalance to the strongest funds. Because the question I always get from people are, hey, what are the best funds? Which one should I be in? And I'm like, well, here's your fund lineup. Here's the ranking system that we use to identify the strongest funds as far as the funds that look like they're going to have the best return in the next 3 months, 6 months, 9 months, or a year. We make sure your 401k is oriented toward those particular funds. Now, just to give you an update right now, the strongest funds that we're seeing in all the plans that we're managing happens to be mid-cap, small mid-cap stocks. Those have come up since the first of the year. A couple of years ago, 2 years ago, we were way overweighted in large cap growth. Obviously, this year, large cap growth is not the place to be. We're seeing a rotation to emphasize small mid-cap stocks going forward. We think that's a very valuable piece of information to have. And again, if you're not making any changes to your 401k, 457, or 403b, you could be obviously missing out on potential returns. Now, the other way we manage risk in your 401k, and at the time that we're doing this video for the first 6 months of the year, the stock market's down sharply this year. The bond market is down as well since interest rates have gone up. We also provide something called a tactical overlay. And what we do with the tactical overlay is we have a set of risk indicators that we use. So for example, if you're in one of our 401k or 457 plans, we actually have a tactical account that goes from cash to stocks to bonds. So our tactical account at the beginning of the year was 100% cash. So when the market started to roll over, you were protected in our tactical account. Then our risk indicators in April and May started to get extremely compressed, and the tactical account actually is 50% in the stock market right now. I don't know if it's going to get 100% in, but right now the tactical account is saying that risk is medium at these particular levels. So how would we manage your 401k, 457, or 403b? We would talk to you about how much you should have in, quote, a tactical overlay strategy. And what we mean by that is we typically like to have 20% of somebody's retirement account in a tactical overlay strategy, which means if we were managing your 401k to start the year, you would have had 20% of your funds inside of a money market fund or a fixed account inside your 401k, 457, or 403b. So we have to kind of use what's available in your fund lineup. So in your fund lineup, if there was a money market fund at the beginning of the year, we would have had 20% of your 401k, 457, or 403b in a money market fund to protect, obviously, against downside that we've seen. We then started to reallocate in April and May. In May, we did a big allocation and we started moving more money back into the equity markets, from that particular standpoint. So the tactical allocation, we actually think is going to become much more valuable in the future. We think the stock market is going to become much more of what I call a fair market. And what I mean by that is that rallies and declines could be much more equal. So therefore, if you do nothing with your 401k, 457, or 403b plan, you could see several years of literally no performance or low performance. We think that going forward, that you have to have an actively managed 401k. And we think Pontera offers the ability to actively manage the 401k. So if any of you have any questions that you want to shoot me at this particular time, feel free to go ahead and do it. What we're trying to do is give you an overview as far as how this tool works and how we use it in our practice, again, to manage retirement plans that we are not the advisor on. So again, in our practice, we have 401k plans and 457 plans that we're the advisor on. This is a product or a service that we're offering where we are not the advisor on a 401k plan. So if you have your spouse is a school teacher and they have a 403b plan that's not being managed, this would be a good idea. If you have a friend who works at Air Products or Mack Truck or some big company and they need help with their 401k plan, this would be a service that we would offer for them. So again, what we found is that many times people's 401ks are literally their second largest asset besides their house that they own, and that nobody's really paying any attention to it. The other thing is that we're seeing is that people use the fire and forget, where once they signed up, they haven't really done anything with the asset allocation. They haven't made any changes. And so therefore they're literally, having nobody managing, their particular fund. The third thing that we're seeing is we see people panic at the wrong time. So right now we have extreme market volatility. Stock market's down this year, bond market's down. Many people are afraid to look at their 401ks because they could be down 10, 15, 20, even 25%. And if you have a substantial 401k of, let's say, $1 million, you could be down $200,000 in your 401k. And one of the things I hear all the time is, don't worry about it. It always will come back. Well, that's true. Over the long term, it will always come back. But the point that we're trying to make is that many times, if you have some tweaks in there, if you focus on the different asset classes that have the strongest relative strength, you can obviously recover faster and hopefully make more money in the long run from having somebody look over your shoulder and help you with their retirement assets. So some of the big mistakes, and we're going to be doing a video on this shortly, that we're seeing that people do in their retirement plan assets. The first one we see is panic. And what we mean by that is we see people move, they go in, they log on to their 401k, 457 or 403b, and the market's already down 20%, and they move everything to a cash option inside their 401k, 457 or 403b plan. Well, basically what you've done is you've really locked in your losses. We don't suggest that you change your long-term game plan, because obviously if you have 5, 10, 15 years for retirement, one of the things I can tell you, I've been doing this a long time, you will go through at least 2 to 3 more bull markets. And a bull market means that prices are going up, stock market's going up, and you'll go through at least 2 to 3 more bear markets in the next, 10 to 15 years. So if you panic and get out now, the problem we've seen is people never get back in. One of the things that we do or suggest doing is that if you are concerned about the volatility in the market, that you move all of your contributions. So when you're making contributions on a bi-weekly basis right now, many people are saying, hey, I just put in $1,000 in my 401k and I just saw it disappear, which it really didn't disappear because the value of my 401k has come down. One of the things we suggest is take your contributions that you're making on a bi-weekly basis and put those into the money market option where it's locked down and safe. You can always reallocate later, or if we're running your 401k, 457 or 403b, we can reallocate it obviously at a later time. The other thing you got to remember though, is that when you're making your contributions to your retirement plan and you're seeing your fund balance go down, you are dollar cost averaging at that particular time. So especially for young people, what you should be doing is upping your contributions to your retirement plans right now, because you're seeing prices that obviously are much lower than they were 6 months ago. Anybody, again, this is a two-way conversation. You can use the Q&A to shoot me a question if you have any questions. I know I've covered a lot of ground here so far on what Pontera is and how it works. I'm going to talk for about another minute or two and kind of give you an overview and go back and really kind of crystallize what we're trying to do here with Pontera. So again, remember, Pontera is a platform that we now as an advisor can utilize to manage your 401k, 457 or 403b plan, where we're not the advisor to the plan. So if your husband or wife has a 401k held away someplace else and it's not really being managed, Pontera would be the solution for that. Now, the question you always want to ask a financial advisor is, how much is this going to cost me? So how we charge for Pontera is we charge 0.5% per year. So if you have $100,000 in your 401k plan, we're going to be charging 0.5% or $500 per year to utilize our service to manage Pontera for you, or manage your 401k, 457 or 403b plan for you. We're going to bill that in a quarterly basis. That means $125 every quarter is going to be billed directly to you. We cannot bill your 401k, 457 or 403b plan. What we do is we set up an individual account with you, and then we either pull the money or you send us the money as far as when you get the billing for having us manage your 401k plan. So again, obviously we're going to charge for this service. We think it's a very valuable service. We've had a lot of clients sign up already for it, but it's something where we can actually manage your 401k, 457 or 403b, where it can be actively managed. We can focus your 401k on the areas where we think you're going to see the best rate of return going forward. We can run a tactical overlay on top of it where, if we think our indicators are stretched and we think the market may not do well for a period of time, we may take a portion of your 401k and basically lock it down. But then when our indicators are, much more positive like they are right now, you're going to see us end up putting money back into the markets and reallocating your 401k back. We think this is what all advisors should be doing for their 401k clients. We do it for our 401k clients where we actually are the advisor to the 401k or 457 plan. But unfortunately, when you're working at a very big company, it's very difficult to even get a hold of your advisor. So with that, I'm going to wrap up. I don't want to go on too long here. I appreciate everybody getting on the webinar today. Again, once the webinar is over, we're going to create a link and then we're going to email that link out to everybody so that everybody can watch the webinar. If you have any questions at all, you can always contact us. If you'd like us to run your 401k, 457 or 403b for you, contact me. My email is Chris, CHRIS, at englebertfa.com. And Englebert is spelled ENGLEBERT, FA for financialadvisor.com. So Chris at englebertfa.com. Shoot me an email. You can always call our office, 484-350-3301. That's 484-350-3301. Or if you'd like, you can download my app by texting Chris E, that's CHRISE, to 36260. That's Chris E to 36260. What's a great thing about downloading my app is I do a lot of videos like this on a weekly basis. We do a market comment. We have a new Trade Talks video up. If you are in one of our 401k or 457 plans, on the second page, you can access your account, which is really cool as well. So I'd like to thank everybody for their time today. I hope you got something out of it. We're very excited about Pontera and the ability to manage people's 401k, 457 and 403b plans where we're not the advisor to the plan. We're very excited about offering this service to you, and we look forward to talking to you in the future.